look at the market construct, we had managed to break above the 25,200 levels. We have cooled off from there. I mean, of course, it is on the back of the fundamental news flow that has been coming in. But on the charts, what is your reading? What are the levels to now watch out for on Nifty and Nifty Bank?
Yeah, hi, very good afternoon. Well, although the broader trend still remains positive for the market, but no, we are expecting some sort of consolidation or a time-wise correction to come in the broader markets, and there would be more of a sector rotation which we could see over next few weeks. So prime reason I think has been the recent up move which we have seen since the second week of April. So no, before going on to the Nifty levels, if I just I would just say on Nifty Midcap 100 Index. So if you look at the Nifty Midcap 100 Index since 11th of April to 11th of May. 11th of June, that is in last 2 months, the index has rallied by about 10,000 points, which comes to around 21% of the index. Now, when you see 21% of rally in just 2 months time frame on the index, you cannot expect that to repeat over next 2 months as well. So the momentum readings are a bit overbought. So this should lead to some corrective phase, which could be in form of a price-wise pullback move or a time-wise correction. Now, considering that the overall trend remains positive for our markets, we are of the opinion that there would be more of a time-wise correction in the broader markets, which would go on for now. And on the Nifty front, the 24,500, 24,450 would be very important support to watch out in the near term. Now, there could be more of a sectoral rotations happening. The stocks or the sectors which have already seen a good run up over last 2 months, they may take a breather. And we are seeing a lot of buying interest shifting to IT stocks, large cap IT names, then even some of the oil and gas upstream companies which are witnessing a good buying interest because of the rise in crude oil that we are seeing. Defense has been doing better, which the most of the stocks have pulled back to the 20-day exponential moving average support. So I think although the index would see some consolidation over next couple of weeks, and there would be more of a sectoral rotation happening in the markets.
All right, so that's the view coming in on the benchmark indices. But Ruchit, also help us with your take on Big Boy Reliance, because yes, of course, we have some brokerage notes coming in wherein they are debating about that the Reliance retail is actually to be valued more, is now coming at par with the oil and gas segment. But technically, how do you see the stock placed up? Because even today, what a move from day's low.
So the stock has already completed a price-wise corrective phase around the recent lows of 1100, 1150, and since then what we have seen that the price up moves have been supported by good volumes, whereas all the small corrections which have been there in between, we have not seen any kind of volume-based selling happening over there. So I think the broader trend for Reliance Industries still remains positive. And on the lower side, the 50-day moving average support around 1380 is a very crucial support to watch out there. So till that level is intact, we expect a slow and gradual up move to continue in Reliance Industries. So if one is looking for more on a positional basis, even at current levels, I believe Reliance Industries is a good buy, keeping a stop loss below 1380 levels.
All right, Ruchit, do tell us what are the pockets of value that you see? What are going to be your picks in a volatile market like this? Do you still have buy calls coming in?
Yes, we have buy calls, but as we said, we are looking for more of a sectoral rotation happening. So only those stocks or sectors where the risk-reward ratio still seems to be favorable are oil and gas stocks, certain especially upstream companies and IT space. So these are two sectors where we have not seen that kind of up move that we have seen in the market in April and May. And now with broader markets showing some signs of consolidation or profit booking, I think this is where the risk-reward ratio is favorable. ONGC would be my first pick for the day, since the stock has seen a breakout above its 200-day moving average after many weeks. Price volume action is strong. The rise in the crude oil prices that we have seen is positive for the stock. So I think one can look to buy ONGC over here with stop loss below 245, expecting target somewhere around 264 to 268. And second would be from the IT space, Tech Mahindra. Now the Nifty IT index is on the verge of a breakout from its consolidation, and Tech Mahindra has been one of the stock which has shown a relative outperformance to other IT names amongst the large cap stocks. So this is where we believe that once the momentum comes in most of the IT names, so the stock which has been showing relative outperformance during this consolidation will tend to benefit the most, and Tech Mahindra qualifies for that. So keeping a stop below 1600, we would recommend going fresh longs on Tech Mahindra over here for potential targets around 1740.
All right. Thank you so much, Ruchit, for getting us those stock recommendations. Thank you so much for taking the time out and speaking with us as well. We're moving on to an ET Now exclusive then, wherein sources inform ET Now that British cigarette maker, British American Tobacco,